Welcome to Explain the Charts, where today we are conducting an in-depth analysis of Microsoft, ticker symbol Microsoft. The current date is April 30th, 2026, and the tech giant is currently the center of a massive market storm following its recent earnings report. As we look at the daily chart, the overall sentiment today is sharply bearish, with the stock trading down over 4% around the $405 to $406 mark. This slide comes despite the fact that Microsoft beat Wall Street's targets for its fiscal third quarter, driven by strong cloud computing and AI business. However, investors are reacting negatively to news that capital spending is expected to hit nearly $200 billion in 2026 to support AI initiatives. Analysts like those at Truist have lowered their price targets, citing concerns that these costs are overshadowing growth. Furthermore, a revised partnership with OpenAI suggests that Microsoft might be losing its exclusive Azure-only edge for flagship AI products. Google Cloud is also reportedly outperforming Microsoft in certain growth metrics, adding more pressure to the stock. On the daily chart, we can see a clear trend of lower highs and lower lows starting from the peak in mid-2025. Last year in July, the stock reached a staggering high of $555 before entering this prolonged cooling-off period. To see the immediate impact of the earnings announcement, let's switch to the 15-minute chart to capture the intraday volatility. We are looking specifically at the period between April 27th and today, April 30th, 2026. On April 29th, right before the close, we see a massive spike in volume and a wild price swing from $424 up to $445 in a single candle. This initial bullish reaction to the revenue beat was quickly sold off as the details of the $200 billion capital expenditure guidance were digested. The subsequent reversal was brutal, with the price plunging down to a low of $407 during the after-hours and early pre-market session. This creates a clear resistance level at that $445 peak, which likely won't be tested again in the short term. The 15-minute candles show a series of red blocks with heavy selling pressure as traders exit positions to avoid the high-cost AI narrative. Notice the VWAP on these smaller timeframes remains significantly above the current price, indicating that most traders are currently underwater on their daily positions. Moving to the 1-hour chart, we can gain a better perspective on the intermediate support and resistance levels. There is a visible support zone around $395 to $400 that Microsoft is currently approaching. Looking back at the hourly data from earlier this month, we see that $370 acted as a major floor in early April. The current rejection from the $430 level is significant because it aligns with previous resistance seen in late March. If the price cannot hold above $400, we might see a fast washout toward that $370 support level. The hourly candles show that even when the stock tries to rally, like the small bounce we saw at 2150 on April 29th, it is met with immediate selling. This suggests that the market is currently in a sell-the-rip mode rather than a buy-the-dip mode. The news of OpenAI's revised partnership is definitely the catalyst for this broken technical structure. Traders are worried that without an exclusive edge, Microsoft's premium valuation is no longer justified. However, the RSI on the hourly chart is likely reaching oversold territory, which could lead to a relief rally soon. Returning to the daily chart, we can evaluate the long-term implications of this price action. In the short term, being bearish is the logical choice given the massive volume of the current sell-off. When we see a stock slide nearly 5% on an earnings beat, it tells us the market is focusing on forward-looking risks, not past successes. The risk of capital misallocation is a phrase being thrown around by major outlets like MarketWatch today. However, from a long-term bullish perspective, Azure growth remains robust, and AI demand is not going away. If you believe in the long-term AI thesis, these levels near $400 could represent a significant discount compared to the $550 highs of last year. But the chart shows no signs of a reversal pattern yet, so patience is required for long entries. We need to see a double bottom or a breakout above the $430 mark to confirm a trend change. Right now, the 50-day moving average is likely curling downward, which will act as additional overhead resistance. The daily transactions on April 30th are exceptionally high, reaching nearly 1 million trades, showing extreme conviction from the bears. Let's recap the key price levels you need to watch for Microsoft. Primary support is at $400, with a secondary, much stronger floor at $370. Immediate resistance is at $424, which was the closing price on April 29th before the full drop realized. Major resistance remains at $445, the failed earnings spike high. I believe the likelihood of testing the $390 level within the next week is about 70%, especially if the broader market loses its current momentum. A recovery to the $430 level is less likely, perhaps a 30% chance, and would require a major positive news catalyst regarding AI efficiency. Watch for the next few daily closes. If we close below 400, the technical breakdown is complete. If we see a long wick forming at the bottom of the daily candle, it might indicate that institutional buyers are finally stepping in. Keep an eye on upcoming commentary from the Fed, as the core PCE index at 3.2% adds a layer of macro volatility to these tech trades. Thank you for watching Explain the Charts, and remember that this is not financial advice. Always perform your own due diligence and research before making any investment decisions in the stock market.